The first part is where he explains the systemic issue. What do I mean by that? Is he eloquently explains the inverted pyramid, where we have on the top end of that pyramid the amount of debt that the world is in, right? It's several trillion dollars worth, and we know that the US accounts for the majority of that. It holds $37 trillion worth of national debt. But then you to add the over 200 other governments' national debts. Now, if you add all of that, that becomes a huge amount of debt, which why he explains we are in this situation where we're kind of pivoting on a small amount of equities or collateral that we have, which is predominantly our cash savings accounts and maybe some hard assets on the side, which accounts for a small amount of collateral, but is pivoted on top of that, this humongous debt, world debt that we have. And this has been the antithesis of all of the financial crises that has brought us to present day inverted pyramid situation, right? And why he thinks that by building or transitioning this inverted pyramid, so this over debt situation or under collateralized system that he's explaining, where we should be transitioning that model into a more over collateralized model, where if we invert the inverted pyramid into a proper pyramid, where we have the base layer of collateral as being the major layer of that pyramid and less debt, well, what's the repercussion of that model transition? Well, you're going to be changing the actual outlook and the actual cultural habit of getting to less debt, but supported by an over collateralized system, because by doing that, you're going to be mitigating an awful lot of issues. I think the main issue is averting any future financial crisis in the future, right? Because where he explains the inverted debt versus collateral pyramid that we're in, well, if you have another financial crisis, well, there isn't much of a collateral that can absorb the next financial crisis that may be around the corner. And that's why he's suggesting if we move into a more over collateralized system, banking system, well, we can avert any future crises, but we could also build a more sustainable and more risk resistant issues in the world. And also there's another advantage which I found interesting. By moving to this over collateralized pyramid structure, we're going to be changing the mindset of citizens around the world in terms of how they actually behave, how they consume their day-to-day assets or consumption in terms of products and services. They'll become more thoughtful and not move into the malinvestment in terms of, well, let's kind of buy the next Ferrari or let's buy the next luxury house. And he explains where the majority of Bitcoin is out there, particularly those that have actually invested very early on into the system and are still holding on to their Bitcoin holdings. Well, they're obviously super duper millionaires. And you don't see these people, nevertheless, showing off or posturing their wealth in their day-to-day. You see them driving normal cars, they don't wear flashy clothing, and they kind of think twice about what to spend next. So there's that advantage as well. And if we can all move into that kind of new ethos, that new paradigm shift under this new over-collateralized pyramid structure, well, it's not just a win-win, but I think the world at that point, which is obviously a utopia, would become a much more pleasant environment to live in. I think we could all agree to that, particularly when it comes to resolving this impending debt problem that the world is faced at the moment. So I think this is, for me, the major highlight from today's episode, with Peter Dunworth giving his rather eloquent explanation as to the importance of adopting Bitcoin as that new pristine collateral. Because at the end of the day, I really find it difficult that we'll ever get to the point where, let's say, we're into the future 10 to 20 years from now, where Bitcoin is now fully embedded into the financial system. I don't think at that point people like to sell off their holdings in order to capture the gains. No, I think the future model, and he's actually insinuated in the episode, at that point we're going to be seeing more as Bitcoin as that collateral, like a securitized asset in which to hold, and maybe lend out into as a future mortgage lending product, rather than securitizing your home in order to be issued a loan that you may need. Well, we securitize our Bitcoin holdings. And by doing that, you're going to be decoupling the assets that we hold as collateral rather than our homes. By decoupling Bitcoin as a collateral asset under this over collateralized system, we're going to be de risking a future global financial crisis around the corner. So I think this is the major highlight that I'd like to leave you today. And I just find it super interesting and fascinating whenever I hear from Peter how he puts it in such a simple terms that anyone can understand whenever he tries to explain these various aspects or attributes of hard money and Bitcoin. So hopefully you've enjoyed today's episode. If you have, please don't forget to hit the like button and to share the video to your friends and colleagues at work. And if you haven't done so already, please subscribe to my channel, as I regularly post some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So I'll see you next time.